I want you to open up your favorite crypto app. Go ahead, I'll wait. See that number next to XRP? That price? Maybe it's $1, maybe it's $2, maybe it's 50 cents by the time you're watching this. Now, I want you to entertain a thought, a pretty radical thought for some of you. What if I told you that number is fake? Now, hold on. Before the XRP Army assembles the digital pitchforks, hear me out. I'm not saying it's a scam. I'm not saying it's going to zero. I'm not even saying you can't make money on it. What I am saying is that the value you see on that screen is one of the most misunderstood, manipulated, and artificially influenced numbers in the entire crypto space. It's a phantom price, a placeholder. It's a number caught in a tug-of-war between immense, world-changing potential and a series of anchors dragging it to the ocean floor. The real value of XRP is not what you see today, not even close. And that's why you need to pay very, very close attention. Because understanding why today's price is a facade is the only way to understand where it might actually be going. Over the next hour or so, we're going on a deep dive. We're going to peel back the layers of this onion, and trust me, it's going to make your eyes water. We'll look at the lawsuit that has the entire crypto world holding its breath. We'll dissect the controversial tokenomics and the monthly dump that has critics screaming. We'll explore the so-called utility and ask the hard question. Are banks actually using it? But we'll also look at the other side. The explosive potential that has people talking about 3, 4, even 5-digit XRP. The ISO 20022 standard that could be a golden ticket. The grand vision of a new global financial system. This isn't about FUD. It's not about FOMO. It's about clarity. It's about understanding that the current price of XRP is fake because it reflects none of the potential outcomes, only the present uncertainty. It's a placeholder in a story that is far from over. So grab a coffee, get comfortable, and let's unravel the mystery of XRP's real value. This is a journey you can't afford to miss. So, to understand why the current price is a mirage, we first have to understand the dream. What was XRP meant to be? Imagine you're in the United States and you want to send $1,000 to a friend in Japan. Simple, right? Wrong. In the traditional system, that money goes on a wild goose chase. It hops from your bank to a correspondent bank, maybe another one, and then finally to your friend's bank. Each stop takes time. Each stop takes a fee. What should be instant and nearly free can take 3 to 5 business days and cost a hefty percentage. It's an ancient, creaky system built on technology from the 1970s. It's called SWIFT. Now, in comes Ripple, the company, and they have a brilliant, audacious idea. What if we could use a digital asset, a cryptocurrency, to act as a bridge between currencies? What if, instead of sending US dollars through this tangled web, your bank could convert those dollars into a digital asset, send it across the world in 3 seconds, and then convert it back into Japanese yen on the other side? That's the promise of XRP. Not to be a currency you buy coffee with like Bitcoin. Not to be a platform for decentralized apps like Ethereum. But to be a tool for the big guys. A tool for banks, for financial institutions. A way to move massive amounts of money across borders with mind-boggling speed and at a fraction of a penny in cost. They call this on-demand liquidity, or ODL. It's revolutionary. It's a multi-trillion-dollar problem that Ripple and XRP are proposing to solve. If they capture even a tiny fraction of that market, the value of each XRP token would have to be, well, a lot higher than it is today. We're talking numbers that would make early Bitcoin investors blush. And for a while, the dream looked like it was becoming a reality. Ripple was signing partnerships left and right. MoneyGram, one of the biggest names in remittances, came on board. American Express, Santander. The list grew. The XRP community, the XRP Army, was ecstatic. They saw the future, and it was powered by XRP. The price started to climb, the hype was real. It seemed inevitable. But then, the phantom menace appeared. Not from a rival crypto project, not from a market crash, but from the heart of the American financial system itself. In December 2020, the United States Securities and Exchange Commission, the SEC, dropped a bombshell. They filed a lawsuit against Ripple and its top executives. And this is the first, and arguably the biggest, reason why the price you see today is fake. The SEC's claim was simple yet devastating. They alleged that XRP is not a currency, not a commodity like Bitcoin or Ethereum. They claimed it is a security, an unregistered security to be exact. Now, what does that mean in plain English? Think of a stock in a company. When you buy a stock, you're investing in a common enterprise, hoping to profit from the efforts of that company's management. The SEC says that's exactly what early XRP purchasers were doing. They were betting on the company, Ripple, to build out the network, create partnerships, and increase the value of their XRP holdings. Ripple, of course, vehemently denies this. Their argument is that XRP is the native token of the decentralized XRP ledger, which existed before Ripple the company even adopted it. They argue that owning XRP doesn't give you any ownership or rights in Ripple Labs. It's a utility token, a tool. Just like you can buy oil, a commodity, to fuel your car, banks can buy XRP, a utility token, to fuel their payments. This lawsuit was a nuclear bomb dropped on the XRP ecosystem. Immediately, the price plummeted. Major exchanges like Coinbase and Kraken, terrified of the regulatory fallout, delisted XRP for their U.S. customers. This was catastrophic. Imagine trying to trade Apple stock, but you can't buy or sell it on the New York Stock Exchange. The liquidity, the ability to easily buy and sell, vanished overnight for a huge portion of the market. So here's our first piece of the fake price puzzle. The price of XRP has been artificially suppressed for years. It's been kneecapped. It can't trade freely on the world's largest crypto exchanges in the world's largest economy. The cloud of this lawsuit has hung over every potential partnership, every investment decision. A bank in New York or London, even if they love the technology, can't in their right mind adopt a token that their own country's regulator might deem an illegal security. The price you see today isn't a reflection of free market supply and demand. It's a price living in a cage. It's a price shaped by fear, uncertainty, and doubt, not by its actual utility or potential. It's a what-if price, perpetually held down by the weight of a legal battle that will define its future. And here's the kicker. There have been partial victories for Ripple in the case. A judge ruled that programmatic sales of XRP on exchanges did not constitute securities offerings. This was a huge win, and the price temporarily surged. But the fight isn't over. The SEC is appealing, and the question of institutional sales is still being debated. Until this case is definitively settled, one way or another, the price of XRP is a ghost. It's a reflection of legal speculation, not market fundamentals. It's fake. Okay, so the SEC lawsuit is holding the price down. That's a powerful argument. But what if I told you there's another force, built into the very DNA of XRP, that critics say is actively pushing the price down from the inside? This brings us to our second reason why the current value is a phantom: the tokenomics. Specifically, the escrow. When XRP was created, 100 billion tokens were pre-mined. All of them, instantly. Unlike Bitcoin, which is mined into existence over time with a decreasing supply, XRP's entire supply was there from day one. The founders took a portion, and the vast majority was given to Ripple, the company, to manage and foster the ecosystem. Now, the community was, understandably, a bit nervous about this. What's to stop Ripple from just dumping all their billions of XRP on the market and crashing the price to zero? To allay these fears, in 2017, Ripple did something unprecedented. They locked up 55 billion of their XRP into a series of cryptographically secured escrows. Here's how it works. On the first day of every month, 1 billion XRP is released from escrow and becomes available to Ripple. The company can then sell this XRP to institutional partners, fund development, or use it for their ODL services. Any portion of that 1 billion that they don't use by the end of the month gets put back into a new escrow at the end of the line, set to be released years down the road. On the surface, this sounds like a responsible system, creates predictability, but critics see it very, very differently. They see a dumpathon. Every single month, 1 billion new, or rather newly available tokens are unlocked. Even if Ripple only sells a portion, say 200 or 300 million XRP, that's still hundreds of millions of tokens of new sell pressure hitting the market, month after month after month. Think about it from a simple supply and demand perspective. If you have a constant, significant, and predictable new supply of a product hitting the shelves every month, what does that do to the price? Pushes it down, or at the very least makes it much, much harder for it to go up. While Bitcoin has its halving events that reduce the new supply, XRP has a monthly unlocking that increases the available supply. The defenders of this system, including Ripple's own CTO, argue that this is necessary. They need this XRP to fuel the ODL network. They need it to get XRP into the hands of the financial institutions that are supposed to be using it. They also argue that much of it gets relocked, so the net effect isn't as dramatic as it seems. But the perception lingers. For many investors, it feels like they're trying to fill a bucket with a hole in the bottom. For every dollar of new demand coming in, there's a constant trickle of new supply from the escrow, potentially neutralizing any positive price movement. This makes the current price fake in a different way. It's not just legally suppressed. It's also arguably supply inflated. The price is constantly battling against this built-in headwind. It's a price that reflects a market trying to absorb a steady stream of new tokens from a centralized source. It begs the question, what would the price be if that escrow didn't exist? If the supply was as fixed and decentralized as something like Bitcoin? We don't know. And because we don't know, the number on the screen is an artificial one, a product of this unique and highly controversial economic experiment. Which brings us to the billion-dollar question. Or maybe the trillion-dollar question. All of this, the lawsuit, the escrow, the tokenomics, it all hinges on one thing: utility. The entire bull case for XRP rests on the idea that it will be used. That banks and financial institutions will adopt ODL and use XRP as that bridge currency to move trillions of dollars around the world. The speed, the cost, the efficiency, it's all there on paper. But is it happening? Is the utility real, or is it still just a promise? This is our third, and perhaps most crucial, reason to question the current valuation. Let's be blunt. For years, the promise of adoption has been just over the horizon. Ripple has announced dozens of partnerships. And this is where it gets tricky. They have a product called RippleNet, which is a software suite that helps banks communicate and settle payments. Many of their partners are using RippleNet. But that does not mean they are using the XRP token. This is the most misunderstood aspect of the entire project. A bank can be a Ripple partner, use Ripple's software, and never touch a single XRP token. Using XRP for on-demand liquidity is an optional, high-octane feature of that system. So, how much ODL is actually happening? How much value is truly flowing through the XRP ledger for this intended purpose? This is where things get murky. Ripple releases quarterly reports on the state of the market, and they highlight ODL growth. But finding clear, independent, third-party data on the actual non-speculative, utility-driven volume is notoriously difficult. Let's look at the MoneyGram case. This was Ripple's poster child. A massive, publicly traded company using ODL. It was proof that the system worked. But what happened when the SEC filed their lawsuit? MoneyGram dropped Ripple and ODL like a hot potato. They said, "Thanks, but no thanks. We can't have this regulatory risk." This sent a chilling message. If even their most prominent partner would walk away at the first sign of serious trouble, how stable is the entire foundation of utility? The XRP community will point to payment corridors that are active, particularly in regions like Southeast Asia and Latin America, where the demand for efficient remittances is high. And they are not wrong. There is real utility happening. But the question is one of scale. Is it enough to justify the current market cap? Is it growing fast enough to absorb the monthly escrow releases? Is it significant enough to convince a skeptical market that the dream is real? Right now, the price of XRP seems to be based more on the narrative of utility than the reality of it. It's priced for a future where every major bank is using ODL. But in the present, that is simply not the case. The vast majority of XRP's daily trading volume is still speculative, just like most other cryptocurrencies. It's traders betting on the price, not institutions using it to move money. So, the price is fake because it represents a future that hasn't arrived yet. It's a price built on a foundation of what if. What if the SEC lawsuit ends favorably? What if dozens of banks turn on the ODL switch tomorrow? What if the trillions of dollars in cross-border payments finally start flowing through XRP? Those are powerful what-ifs, but they are not the present reality. And the price on your screen today is a price for the present, not the future. It's a price that is disconnected from the very utility that is supposed to be its lifeblood. It's a speculative placeholder, waiting for the utility to catch up to the hype. Okay, we've painted a pretty bleak picture. A suppressed price because of a lawsuit, an inflated price because of the escrow, a speculative price because the utility hasn't reached critical mass. It would be easy to just stop there and write XRP off. But that would only be telling half the story. Because on the other side of this coin, there is a case for a future so bright, it's blinding. And we have to look at this side to understand the full scope of why today's price is just a temporary illusion. What happens the day the SEC lawsuit is finally, definitively over, assuming a favorable outcome for Ripple? What happens when that massive, dark cloud that has been suppressing the price for years finally evaporates? The first thing that would likely happen is that every major US exchange that delisted XRP, Coinbase, Kraken, you name it, would rush to relist it. An asset that was once off-limits to the world's biggest crypto market would suddenly be back on the shelves. The floodgates of new liquidity, new investment, and new retail interest would swing wide open. The price effect of that alone could be explosive. But it's much deeper than just a relisting pump. A clear regulatory status in the United States would be a monumental green light for every single financial institution that has been sitting on the sidelines. The career risk for a bank executive to adopt a potentially illegal security is immense. But to adopt a legally clarified, high-efficiency digital asset, that's not a risk. That's an innovation. The conversations with those big banks, the ones that were put on ice, could restart overnight. The hesitation would be gone. This is the single biggest catalyst that the entire XRP ecosystem has been waiting for. Then there's the technology itself. Let's not forget the core promise. The XRP ledger is fast. Incredibly fast. Transactions settle in 3 to 5 seconds. Bitcoin takes 10 minutes, sometimes an hour. Ethereum can get congested and slow. The XRP ledger can handle 1,500 transactions per second, right now, and can scale to handle the same throughput as Visa. It's also incredibly cheap with transaction costs of a fraction of a cent. And it's green. The energy consumption is negligible compared to proof-of-work systems like Bitcoin. And then there's the ace up its sleeve, ISO 20022. Now, stay with me here because this is important. ISO 20022 is a new global standard for financial messaging. Basically, all the world's banks are upgrading their systems to speak the same language. It's a massive, once-in-a-generation plumbing upgrade for the entire global financial system. The SWIFT system we talked about earlier, it's migrating to this new standard. And guess who is one of the first and most prominent crypto projects to be compliant with the ISO 20022 standard? Ripple and the XRP ledger. The theory is that as banks upgrade to this new system, they will be looking for new, efficient ways to move value. And their already integrated and speaking the right language will be Ripple and XRP. It's like building a train station in a city years before the national railway network gets there. When the trains finally arrive, you're the only station ready to handle the traffic. If this plays out, it could be the catalyst for adoption on a scale that is hard to comprehend. It wouldn't be about convincing banks one by one. It would be about being the default option for a new global standard. So you see the dilemma? On one hand, you have the lawsuit, the escrow, the slow adoption. On the other, you have a potential regulatory green light, superior technology, and a backdoor into the new global financial standard. These two realities cannot coexist forever. One side has to win, and this is the core of our thesis. The fake price you see today is the market's attempt to price in both of these wildly different outcomes at the same time. It's a price of confusion. It's a price of paralysis. It's the average of 0 and 1,000,000. It doesn't represent the true downside risk, nor does it represent the explosive upside potential. It's a broken number, a placeholder waiting for a verdict. So, where does that leave us? What should you do? What should you pay attention to? First, let's be crystal clear. This has not been financial advice. This is an educational framework. It's a lens through which to view the market. The goal here is not to tell you to buy or sell. The goal is to make you think, to make you look beyond the ticker symbol and the daily chart. The value of XRP right now is fake because it doesn't reflect its true potential, either positive or negative. It's a snapshot of a project in limbo. So, when you think about XRP, don't ask, what is the price today? Ask these questions instead. What is the status of the SEC lawsuit? This is priority number 1. Every filing, every judge's ruling, every statement from either side is a clue to the final outcome. The end of this case will be the single biggest catalyst for XRP, for better or for worse. What is the real on-chain ODL volume? Look for the data. Don't just listen to partnership announcements. Is the actual utility growing? Are more payment corridors opening up? Is the amount of money being moved with XRP increasing quarter over quarter? That is the ultimate proof of the pudding. What is Ripple doing with the monthly escrow? Track the escrow releases. How much is Ripple selling? How much is being relocked? This will tell you about the sell pressure that the market has to absorb. A decrease in Ripple sales could be a very bullish sign. What are the big financial players really doing? Keep an eye on the news around ISO 20022. Are central banks talking about digital currencies? Are major commercial banks starting to pilot projects with digital assets? The grand vision for XRP depends on the big fish, so watch what they're doing, not just what they're saying. The story of XRP is one of the most fascinating dramas in the financial world today. It's a high-stakes poker game with trillions of dollars on the table. And the price you see on your screen is just the nervously shuffling chips of a player who is waiting for the final cards to be dealt. Is it being suppressed by a lawsuit? Yes. Is it being inflated by a constant new supply? Arguably, yes. Is it being propped up by hype and future promises? To a large extent, yes. The price is a contradiction. It's a paradox. It's fake. The real value will be revealed not on the charts of today, but in the courtrooms, in the boardrooms of banks, and in the plumbing of our global financial system over the next few years. Your job as an informed observer is not to guess the price. It's to watch the story unfold. So pay attention. Pay very close attention. Because when the real value of XRP is finally decided, it's not going to be a quiet affair. And it certainly won't be the number you see on your screen today.